Moving on to Ajay then.
Hi Ajay.
Hi. There was an interesting statement that that Prerna made sometime earlier, and I want to take the perspective to a different end now. Is that she mentioned that insurance is insurance and investments are investments. And from
yes.
a person who has spent his life in the insurance industry, I'm sure you have some interesting opinions about that, and that's what leads to a very good discussion. And help us understand a little bit about insurance as an investment tool, and also what we are discussing in terms of what you have on the slide in terms of ups and downs in life.
Yes, Ajay. See, if you look at the slides, okay, every human being has two sides of his life, the ups and downs. Okay, so ups could be the positives of life, that is a person having a good education. After getting educated, he gets a good, better job. Then he looks to get forward to getting married, then start a family, having children. Then he looks at wealth creation, maybe having a house, okay, additional house, something like that, and then finally planned a retirement, whereby he can say, now I can stop. I have earned enough of money, and now money is already working for me, so I need not work for money. Okay. But at the same time, there are negatives in life which people forget, and that's the worst part of a human being. It could be a premature death. It could be a loss of job. There could be accident and disability, due to which there could be a stop in income. The person might temporarily, because he is bedridden, his income stops, and the expenditure to treat him increases. Then there could be critical illness. Ajay, if you look in today's time, okay, disease like diabetes and blood pressure are like common cold and cough. Okay, it occurs, it happens, it is diagnosed to any person who maybe around about 35 years and above says I have diabetes or I am suffering from blood pressure. And the worst part a person could have in negative would be not planning his retirement. So while my colleagues Prerna and Gajendra said that you have all those investment tools, vehicles to plan and achieve your goals. Okay, all said and done, fine. Till the time I am alive, I can manage it. But what happens if I am no more? If I have some critical illness, or if I meet an accident and become disabled?
So what happens very interesting, Ajay, is that the insight that you're bringing in is that all the investment tools or the financial tools that we spoke about till now are given the assumption that you are alive, or given the assumption that you are working and you are being able to generate that income. And the perspective that you are bringing in is that there are possibilities that you are not being able to generate the income that you would have thought that you could. Yeah, please go on. That's an interesting perspective.
Absolutely right. Absolutely right. Yes. Yeah. So what I need to do is, see, I need to have two plans always, plan A and plan B. So if my plan A fails, then my plan B should be active and it should work for me. I am never dependent only on one person. I always have a backup. I always have a backend. Similarly, for all those investments mentioned earlier by my colleagues, insurance is a backend. It's the second option which every living human being having income should keep it. For example, if you look at life insurance, the first thing is, yes, it's a forceful saving. The humans have a tendency, okay, if I have a SIP, but at times it may happen that I have some other emergencies coming into picture, so I withdraw money and my SIP gets stopped. I have a recurring deposit, but I say, let's see, next month I'll put in two EMIs instead of one EMI, okay, but because I need money, I could stop my EMI. But life insurance, yes, I know that because if I don't pay my regular premiums, my policy will lapse and the risk cover will not be there. And since there is the liquidity portion is also not much easy as other forms of investment. So even if a person wants to liquidate, he will liquidate his other investments first, and life insurance is the last resort to liquidate. So hence, life insurance happens to be a forceful saving instrument. Okay, though it is not a investment instrument as said earlier, it's purely a protection plan. Again, in protection plan, you can't purely depend on term plans, because term plans, they don't have any maturity value. So if a person is alive, if he has got some critical illness diagnosed, okay, then the investment forms of insurance would help him to meet all his goals. Okay, so you have plans like traditional plans where you get the sum assured, defined sum assured on maturity. You have the ULIP plans in which you get the market value, the fund value, okay, and as all said by my colleague Gajendra, if you stay invested in a stock market for more than 15 years, okay, the average return what the stock market gives is around about 20-24%. So insurance, first and foremost, it is not meant for a short term. It is always meant for a long term. Partial withdrawals in ULIP helps you to meet your medium term goals. You have riders like disability and critical illness. So there are some 11-12 diseases which are covered by most of the insurance companies. So if somebody is diagnosed to suffer from say kidney failure or a paralysis, in case of health insurance, okay, you have to spend the money and then you have to get it reimbursed from the insurance company. But in case of these riders which are attached with your life insurance policy, most of the insurance company, or rather all the insurance company, they pay the benefit on diagnosis, which helps you to get the person treated. The money which you get, it helps you to get him treated, pay the expenses, okay, maybe of hospitalization. At times, it may happen that I may not be get admitted to a hospital. There is a cashless facility where my TPA is attached. So I may have to go to a hospital whereby I have to first make the payments and then claim reimbursements. In such a situation, critical illness rider works. In case of disability, if somebody meets with, unfortunately meets with an accident, and there is a disability, say 2 parts of the body gets amputated. In such a case, what happens is my income has stopped, but the expenses on me will increase. My family expenses are still there, and my income has stopped, and my expenditure is increased. In such a situation, the disability rider, okay, it pays a predefined sum assured, which helps my family members to overcome the situation which they are facing. Okay, never late than done. Life insurance policies can be taken for specific goals. So if I want a policy for my child's education, yes, I can have a plan for my child's education. Unforeseen circumstances, if I am no more, what the life insurance policy does is, it not only pays my premium, there is a rider which is called as family income benefit rider. So on a monthly basis, it gives 1% of the sum assured to the child, okay, whereby the child can, he does not stop going to school. That 1% of the sum assured ensures that the child regularly goes to school and all his school expenditures are met, which is may not be possible in some other forms of investments. Okay, that's there. Secondly, as I said, life insurance is not only meant for living too long, it's also meant for dying too early. So the moment if I die early, then all my goals which I had, my dreams will remain a dream. But if you have taken a life insurance policy, I assure your dreams, okay, are converted into realities by the insurance policies the customer has bought. That is
Ajay,
what
very quickly, an interesting insight coming from you, and that's a very good insight that we can tell our viewers, is that whenever you are looking at a life insurance policy or any life insurance cover, do not forget that you have a host of riders available.
Yes.
Please speak to either your agent, whichever company you are buying your insurance cover from. Speak to your agent, speak to your partners to understand what additional riders could benefit you from a perspective of critical illnesses or accidental disability, loss of job, all of that. One important question I want to ask, Ajay, is that if I have a life cover and I buy, I also top it up or get a rider which is a health cover, should I also look for a pure health insurance cover? How should that work out?
Yes, see, the rider what I'm talking about, critical illness rider, is it only covers some 10 to 12 major illnesses. Okay, that could be first heart attack, stroke, cancer, kidney failure, major organ transplantation, something like that. Okay, and it is only paid on diagnosis. But then let us assume some a person has got some operation to be done, let us say of abdominal. Okay, this abdominal diseases is not covered in critical illness. So if he gets admitted to a hospital and gets treated, then he has to no, spend that money from his pocket, which is not covered by life insurance critical illness.
So what you're trying to say is that you know, make your life insurance cover more robust by adding those riders, but also look for a good health insurance just to cover your hospitalization expenses and all of that. Thanks, Ajay. We can move on. Just very quickly, our Twitter contest, which you are doing with #MyLifeMyPlan, is getting a lot of interesting tweets. I'll just read out a couple of them. One is an appreciation for Gajendra. Kamlesh has said that, Kamlesh Tweets is the handle which had said, thanks Gajendra, that was really great insights, extremely helpful. Another person, SMGene, the handle @SMGene, has also said, Gajendra is indeed a pro because I participated in the case study only to find that I have a lot to learn. So Gajendra, a lot of you know, appreciation coming for your session here. Also, a lot, some appreciation coming for Prerna. We have a tweet which says, Prerna, great insights, very helpful, listed out well. There is another tweet which says, I used to face a lot of problems in the past allocating funds towards the right investments. Prerna, thumbs up. So those are the kind of tweets that we are getting. And Ajay, back to you. So we were talking about riders and health insurance, but let's move on from there. Looking at the time, we have you know, a short time, so we also have some questions coming in, but let's go ahead. Ajay.
Yes. Secondly, what you can say is life insurance is a tool whereby a person can transfer his risk. People would like to transfer their property in their spouse name, in their children's name, okay, but you can't transfer the risk to your wife or to your husband or to your children. It's only the insurance company who is ready to take your risk, the risk of your accident, the risk of you having critical illness, and finally the risk of you dying too early. So rather than I taking the risk, it's better that I transfer this risk, okay. So the risk of dying too young or the risk of living too old. Insurance policies are meant for both. What is the concern if I die too young, okay? I need to protect the lifestyle of my family. See, basically what I say is, I as the head of the family member, I am an ATM machine for my family. I generate money for my family, so I am an ATM machine. Anytime they need money, they come to me. So by dispensing money, I have created a lifestyle. I have addicted them to a certain lifestyle which they are living. But at the same time, I need to ensure that the moment I am no more, my income would also stop, and which will affect their lifestyle. So I need to cover that, okay, which as Gajendra said that you can get it covered through a term plan, okay, because the risk of dying too early, you need to have a huge sum assured and at a reasonable cost. So yes, probably at this point of time the term plan comes with great help. Secondly, money is required for other financial needs. So we have those financial goals of child's education, marriage, okay. So for that also I need to start planning ASAP. So the power of compounding will come to my help, and I need to save less and ensure that the money which is required on that particular occasions meets my expectation. Similarly, there are concerns that if I live too long, okay, in today's advanced science, where you have so many medicines available, surgeries available, whereby a person can live beyond an expected age. Then I have a concern is, how do I accumulate wealth, okay? How do I diversify my risk? And because if I live too long, then my income earning capacity comes to an end at a particular age, maybe say 50, 55, 58 or 60, whatever it is, okay? Secondly, I also need to ensure that whatever estate I have built, that passes on smoothly to my legal hierarchy. Other forms of investment, you may not be able to say that it's an asset creation, okay? But yes, definitely insurance is an instant creation of estate. What I call is instant creation of estate, because the moment I buy a 50 lakh policy, 50 lakh sum assured policy, okay, in case of my death, my family will get 50 lakhs. In case if I am alive, then on maturity I'll get that amount, which means that amount sum assured which I have created, I am certain to get, either in case of death or in case of maturity. So this is a great form of wealth accumulation, and I can do a legal section because ultimately my family members, my children, my grandchildren, they would expect something from me, that when this old fellow dies, he would leave us for us something. So that's one thing.
Ajay, looking at the time, Ajay, we need to move a little faster. So
fine. Yes.
You know, there's an interesting pyramid that you spoke about. If you could run us through that in very short.
Right. Ajay, I would just like to put one line. People have all the time in the world for investments, but very less time for insurance. Okay, so that's the same thing which is happening with us. Nevertheless, I will utilize the time given to me. What I say is, if you look at this pyramid, it shows at the base protection and peace of mind. The second one, savings and safety, and the third one is investments. So if I look at a common man, the first concern for him after he starts earning is he wants to protect. He wants to protect. He ensures that whatever income I'm getting, that income should be regular even in near future also. So I should invest at such a place whereby even if my income stops, okay, my family members are not deprived of this, and I also have peace of mind that wherever I have invested money, I don't have to look at it again and again. Once I have done the protection part, then I do the savings and safety. Then I start some additional savings, okay, maybe for my short-term goals. And last but not the least, when people talk about investments, high returns, okay, which is mostly into equities, okay, then that's the third top of the pyramid where it should fall. So it should not be a topsy-turvy whereby people first look at investment, then look at savings, and then protection, okay. Always, which is the current scenario which we look at, the young generation, they would rather like to spend money. So I would like them to follow this pyramid.
Thanks, Ajay. That's a very interesting, and there is, I can already sense that there is an interesting debate between investment first, protection later, or protection first, investment later. And all that I can tell my audience and everybody is that whatever decisions you are taking, take informed decisions. Consult your financial planners, speak to your agents, ensure that whatever instrument that you are getting invested in or you're buying as a protection for your family, you do that after a great deal of research and understanding what are the benefits, what are the the expenses structure, the structure of payments that you would receive. Please ensure that you make very informed decisions.